factory output springs a positive surprise. July IIP grows at a faster than expected 4.2%. Growth in June also revised upwards as dark clouds over manufacturing go away. Volatility is the only constant on the Dalal Street as markets end with marginal losses. For the week, major indices have gained over 1.5%. It's not just a SEBI probe. CASTEX Technology stares at a court battle in the United Kingdom. Bondholders in the company, including Standard Chartered, set to take legal action over converting their debentures into shares after allegedly ignoring legal notices. That's an exclusive. Duty hikes rescue the government and help fill the coffers. From the current 36% tax growth shrinks to just 12% when excise duties are removed.
We're here for the long term, and that's why we want to have 49% and work closely with our partner.
Let's not get hung up about India control, India management, UK control, UK management.
The control issue is the least of our problems, says British insurance giant Bupa and Standard Life, as they see immense growth potential in India.
It's a tough place to do business, right? In our business, we require 250,000 approvals a year.
If we want a product for our Indian retail that's made in India, often we have to export it first, which is just ridiculous.
From 2.5 lakh approvals in a year ago to importing made-in-India products back to India, Diageo and Pay Or Choose call on the government to cut the red tape and improve the ease of doing business. Tech major Infosys accepts that it has not been aggressive on the pricing front. The management tells analysts that they are willing to take an initial hit on the margins in order to bag new large orders. A Mumbai court finds 12 out of the 13 accused guilty in the 7/11 Mumbai blast case. 5 of them are convicted under Section 302 of the IPC, which carries the death sentence. 187 people lost their lives when 7 blasts ripped through local trains in 2006.
हमारे 10 वर्षों का जो एवरेज ग्रोथ रेट है वो नेशनल एवरेज से बेटर है।
जब पूरी एनर्जी पॉलिटिकल मैनेजमेंट में चली जाएगी तो गवर्नेंस कैसे होगा?
बीजेपी वही है जो आरएसएस से निकल के आया है, निकल के आया है।
बिहार को अगर सबसे बड़ा नुकसान हुआ है तो गवर्नेंस हैड बिकम द बिगेस्ट कैजुअलिटी। जो सुशासन या जिसको कानून का या शासन कहते थे, तो जो गवर्नेंस है वो सबसे ज्यादा प्रभावित हुआ इस गठबंधन को टूटने के बाद।
अब इतना दिन से काम कर रहे हैं तो जो काम किया है, जो लोग काम से संतुष्ट हैं, वोट देंगे।
पूरी तरह से हम लोग तैयार हैं, इंतजार था इसी घड़ी का।
Well, the battle for Bihar has hit fever pitch. Tonight we bring you the main protagonists under one platform. Good evening, Nantara.
Well, good evening, Survi. She's joining us from Mumbai. I'm Nantara Rai, joining you from the Delhi studio. Election talk coming up for you later on the show, but Surbi, turned out to be another action-packed day on the Dalal Street.
Absolutely, that's right. Opinion polls have already started to trickle in, and if indications are anything to go by, this could be a cliffhanger in Bihar. But election talk is going to come later. Let us talk about that market action that Nantara just referred to. Well, it's been a rather flat closing to an otherwise extremely volatile week of trade on the Dalal Street. As the Nifty and the Sensex ended almost flat today, it was selective stocks in the mid-cap space which saw maximum buying momentum. On a weekly basis, Nifty was up around 1.7%. The Sensex gained 1.6%. As part of our special offering, MF Cafe, we spoke to a whole host of fund managers earlier today, and they spoke about their investment strategies. We asked them about their best and worst investment decisions, and here's what Anup Bhaskar had to say.
When you look at it globally, funds have become much more mature, and they have a certain style, and they have and they stick to it. I think so. Here it will take some more time for us to come to that kind of level of sophistication. You have companies which are priced quite okay. So you have the case of Hero or Bajaj, but people don't want to buy those. They only want to buy Eicher Motor. I think that once we have more economic growth, you will find that these kind of stocks will come back into the vogue, and those are the areas where you can go and generate alpha.
Well, so that's the day of the markets for you, and some fund managers reacting, giving you advice on how to approach the last street. And here's the big macroeconomic data of the day that came out post-market hours. Good news for India on the factory output front. July factory output number has come in at 4.2%, significantly higher than the estimates of around 3.5%. What's also important is the fact the capital goods sector has posted a sharp turnaround. Heather Venkatesh now joining us with a complete breakup of the numbers and what it means for everything. Now that the government can take heart from those numbers, and of course the big question, will the RBI governor do anything or not?
Well, 3.4% was what our poll threw up, and that compares with 3.8, but 3.8 for the month of June. But what's very good about the IIP numbers is that you have a 60 basis point jump over our estimates. We get a 4.2 number. But what is even better is that the June number is also revised by 60 basis points higher. So from 3.8, we go straight away to 4.4. The positive is not just that the capital goods coming in at 10.6%. That was probably compensating for the minus 3.6% in June. The positive is also the consumer durables number coming in at 11.6%. That is the second straight month of big double-digit growth, because in June it grew by 16%. Of course, this comes off a very low base. We did see very good car sales number in July. There is still an element of doubt about August, because we got poorer car sales number in August. So while we don't want to sound too much of a wet blanket on these numbers, one will have to still wait and watch to see how much of this momentum carries into the festival season. Suffice it to say that if there was a lot of pessimism that the Chinese devaluation and the slow growth in that economy, the consequent fall in commodity prices are all leading to in part dumping, which will affect Indian manufacturing, and in part lower exports, which will again affect Indian manufacturing. That evidence is not there in the July numbers. So a bit of over-pessimism at least will get erased by these numbers. The negativity comes only in the consumer non-durable number, and that's a very big weight in the IIP. Non-durables would be things that perish, your tea, coffee, and other kinds of consumer non-durable, that which doesn't endure. Those have contracted by 4.6%, and even last month it was a measly 1.3%, attributed largely to the fact that rural demand would perhaps have fallen because of the less than expected monsoon. Also urban demand not quite picking up. Barring that, the picture looks reasonable, and you should expect the stock markets to react positively.
All right, Lata, thank you so much for that. So the question is, will the RBI go ahead and provide another boost to the economy by cutting rates on the 29th of September? Well, two economists, Shubhra Rao of Yes Bank and Gaurav Kapoor of RBS, believe that there is a distinct possibility that the central bank will cut rates by at least 25 basis points.
Our assumption, Fed will stay put in September, and as a consequence, we are looking at a 25 bips cut on September 29th.
Okay.
Well, certainly higher chances of a rate cut on the 29th by 25 basis points, depending on what the Fed does, and along with that, what the Fed says about its trajectory. But I think there is clearly the case for a rate cut has the environment around a cut is developing.
A lot of experts now expect at least a 25 basis point cut. Many say they should be much higher, and more on what the Fed could do, not do, coming up for you later in India Business Hour. We'll stick with macroeconomics for now. More good news on the external front. Current account deficit in the first quarter this fiscal has come in at 1.2% of GDP, which is an improvement of 40 basis points in comparison to the same period of last year. Aiding this number is a fall in merchandise trade deficit and high net earnings via services. Now, the government has been going to town, claiming indirect tax growth has skyrocketed to over 36% from April to August of this year. But a closer reading shows that without the excise duty hike, growth is just over 12%. Sapna Das are joining us with her analysis of all of those numbers. Sapna, something the finance minister has also been talking about, the crude price fall, and thus the new highway sets, etc., is all coming to his rescue.
Well, absolutely. In fact, this data is already in the public domain, but, a closer look just reveals that the gap between the actual growth without the duty measures or without the additional revenue-raising measures and what they're actually getting as part of the budget estimate, there's a huge difference over there. So if you take out the excise duty impact from the excise collections, the growth rate actually is just around 9% between April to August. So you may have government indicating that green shoots are already visible, and you may also have a better IIP imprint that has, kind of come in. But the fact is that that has yet to be reflected in the actual numbers. So excise growth at 9% between April to August suddenly shoots to almost 70%, crosses a figure of 1 lakh crore between April and August, the moment you take in the excise duty impact. So additional revenue that has come in from the government is close to 37,000 crores in just the first 5 months of the current fiscal. Similarly on service tax. Service tax, of course, the rate hike happened only from June 1, so it will take some time for that impact to come in, but 6,000 crores is already what they have gotten. So without that impact, actually service tax collections have grown only 12% against the almost 22% growth post the service tax hike. 6,000 crores have already come in, and this number will now grow because, it will take some time for the revenue numbers to actually catch up with the rate hike. Overall, what is the picture like? Well, overall, government has already indicated 36.5% growth in indirect taxes between April to August. Actually, the growth rate is around 12%. So if you don't have these duty hikes, all the big talk about, green shoots are visible in the economy and, turning around and better IIP imprint, all of that is not actually showing up so far. And so far, actually, the collections have gone up by a massive 47,000 crores between the first in the first 5 months of the current financial, only due to the duty impact. There is no other indication anywhere that shows that, yes, things have really changed at the ground level.
Sapna, thank you so much for that. So those are the big numbers and their internals. Moving on, CASTEX Technologies is staring down the barrel of a gun. Standard Chartered and its clients have asked their trustee Citicorp International to initiate legal proceedings against the company in an English court. The key allegation is that CASTEX ignored legal notices from bond trustees and converted FCCBs into shares. Sajit Mangat and Kritika Saxena have details.
Auto component manufacturer CASTEX Technologies is in for more than just an investigation by SEBI into alleged stock price manipulation. The mandatory conversion of foreign currency convertible bonds or FCCBs, which appears to be the result of this alleged price manipulation, may land the company in trouble in an English court. CNBC TV18 learns that the company went ahead with this conversion despite a legal notice from Citicorp International, the trustees to the bonds, to desist from the exercise. So now, Standard Chartered Bank, which holds these 6% FCCBs through an asset-swapped convertible option transaction, has asked Citicorp International to initiate legal proceedings against the company in English commercial court. In turn, Citicorp International has asked Euroclear, which currently holds these instruments, not to proceed with settlement of the bonds till the final outcome of the proceedings in English court. What this development means is that in spite of the company proceeding with the conversion of FCCBs to shares in India, these instruments remain debt instruments under English law till the case is disposed of. That leaves CASTEX with a tough choice, since the bonds attract interest payments twice a year and the next payment is due on the 5th of October. Option 1, the company decides to pay the interest despite issuing shares, subject to the trustee holding this interest till the final outcome of the legal proceedings in English court. This option will help it avoid a default even if it loses the case. Option 2, the company decides not to pay the interest on grounds that the bonds have been converted to shares. However, should the company lose the case in English court, the company will be held in default, and this will trigger an accelerated debt repayment to both classes of bondholders. CNBC TV18 is yet to hear from the second class of bondholders, the entities that hold 2.5% FCCBs. But sources indicate that this class of bondholders may also ask the trustee to initiate legal proceedings against the mandatory conversion. An email from CNBC TV18 to the senior management of CASTEX Technologies remains unanswered. And while Standard Chartered responded saying it cannot comment on market speculation, Citicorp International declined to comment on the matter. In Mumbai with Sajit Pangat, Kritika Saxena.
That's the latest as far as CASTEX goes. Taxation reforms and ease of doing business dominated the discussion as top business leaders from Britain descend on India for the India-UK Business Convention. Shireen Bhan moderated a panel discussion on strengthening trade ties between both nations. While almost all business leaders were upbeat on India's prospects, they also urged the government to cut the red tape and make it simpler to do business.
it's a tough place to do business, right? In our business, we require 250,000 approvals a year.
250,000?
Approvals a year. It's not easy. However, this is all to play for. And I do believe the Modi government is going to, and the state governments, will try to make it easier to do business.
250,000 approvals a year. And then we talk about the ease of doing business. Besides the number of approvals, for instance, that are required, what else would you like to see change in order for you to deepen your engagement with this market, in order for you to deepen collaborative innovation in this market?
I think it's largely in this area of ease of doing business. We need, and the government, the reform we are looking at in areas like GST are very important. Clearly, we would like alcohol included in GST.
Is that a disappointment, the fact that alcohol is going to be out of the GST, as and when the GST is in fact rolled out? April 1, 2016 is still a question mark.
No, of course, because it will make business easier. It will result in the consumer seeing more benefits. So we would support it.
David Fletcher at Bupa, if I could ask you, because one of the key areas of opportunity is within the financial services space, insurance in specific. And there we actually have seen the government change its FDI regulations. We've hiked the FDI cap from 26% now to 49%. You've got a joint venture partner here in India, and you're actually the first to get approval to hike your stake in India. If you can take us through what is really changed as far as the regulatory environment is concerned and the opportunities that you now see in a more open market.
We were delighted when the FDA change was announced. We're here for the long term, and that's why we want to have 49% and work closely with our partner.
You clearly don't find the control norms as part of the FDI regulations as being a dampener or a disappointment?
I mean, we're in a regulated industry. We accept we're in a regulated industry. There's very, very good reasons why it's a regulated industry. So we accept that, and we find we can work with governments around the world. India is no exception for that.
Let's not get hung up about India control, India management, UK control, UK management. As Tata does, take the very best from both countries and work out how you can push forward, whether it's in high-tech, whether it's in insurance, whether it's in consumer goods. Take the best from both countries and let's see how we can move forward.
Shashi Pukundan at BP, you're one of the largest FDI investors into India. You have a partnership here in India. As far as policy direction is concerned, do you believe that there is more clarity now that the government is talking about moving to a revenue share arrangement, and we finally have a formula in place as far as gas pricing, for instance, is concerned?
Clearly, it's a positive direction that the government is setting. I'm hoping that this is the direction that they want to go in terms of the long term.
Do you see big-ticket FDI coming into the sector?
Right now, with the oil prices pretty low, it's difficult. You'll need to be able to compete against global. I mean, if you just take the top 4 oil companies, all of them together have cut $200 billion of capital for the next 5 years, which basically means your threshold for competing has just gone up. So it's important that we bring in these kind of policies that you're doing with the marginal field also into the big ticket game, because ultimately scale and scope is what's going to matter.
On that side, another area of opportunity where we could actually see some deeper collaboration is education. What could be the scope of possible collaboration, especially given the Skills India mission, given the fact that the Prime Minister wants to position India as the human resource capital of the world?
We have a political challenge about universities, because very many Buddhijeevis in Delhi feel that our minds will get contaminated if we allow foreigners to come inside. And we tell them our minds are already contaminated beyond repair because of the internet. We know much more than you, so don't worry about us. But they send their children overseas, but don't want to allow foreign university inside. We're telling them, create an SEZ where you could have the best university come and give their own degrees without going to UGC, AICT, forget about them, because it's an enclave. And it's an overseas enclave. Please do that. I hope they listen.
Savers is on the table as well, and maybe we can get in a comment. Yes, sir, go ahead.
We were the first company to get 100% FDI in retail in India, so we've been operating by ourselves now for about 4 years. And we're wanting to use India as the basis to expand in the whole region. And we've built up a lot of intellectual property within our own team here, but which will manage the whole process in other countries. But we cannot use India to physically move product around.
Because of the logistics constraints.
The logistics constraints, the cost of import and the cost of export, we can't reclaim taxes. We pay tax on MRP on import. It's the only country in the world where that happens. So we cannot use India to be the hub, apart from an intellectual level. Made for India is also a problem because export companies will not deal domestically. So if we want a product for our Indian retail that's made in India, often we have to export it first, which is just ridiculous.
So you export and then import it back and
Correct,
then sell it to the Indian customer?
Yes, otherwise we can't sell it.
Well, from one exclusive to another, Shireen also caught up with the UK Business Secretary Sajid Javid on the sidelines of the UK IBC meeting, who says there is plenty of scope for trade ties to improve between the two countries.
There's already a lot of trade going on, and I think that also reflects a special relationship our two countries have. And I'm here just to try and make it even stronger, and trade is a hugely important component of that. We want to see more trade in every area, and if you look at where we've seen the highest growth, has certainly been in the technology field, in manufacturing, across both countries, and we'd like to see more investment. The UK already is the largest G20 investor in India, and India is investing more in the UK than the rest of the European Union put together. So it shows you the strength of the ties.
What would concern you most? We've talked about a bunch of risks that the world is faced with, the global economy is faced with. What would worry you most today?
I think, when you look at the global economic dashboard, I sort of describe it as flashing red. And what is flashing red is the concerns about the Eurozone. Only in the sense that we've had this Greece problem that's been running on for years and years now, and it still isn't resolved. I don't think anyone would describe it as being something that's been dealt with in any definitive way. And that is still there. It's hanging over the Eurozone, and I think that is something where the Eurozone itself needs to get its act together. Britain is not part of that zone, but it does affect us because over half of our the trade of half of our exports are with the rest of the European Union members. The fall in the global oil price is having a big impact in global economies. Depending what kind of country you are, how you consume those products, the impact will be positive or negative, but it is still a source of volatility, and it's having a knock-on impact on other commodities because of a fall in demand. So global steel prices have almost collapsed. There's a glut of supply, and again, that's having a knock-on impact. So these are all big issues out there in the global economy. They're not something that any one country can control or have a big influence on. We have to sort of accept them, watch them closely. The biggest thing I think any economy can do, whether that's India or Britain in response, is just to make sure its own economy is as strong as it can be. Its public finances are as strong as they can be, that those structural reforms that are required are being made. That's certainly what we've been doing in Britain. And when I look at India, a lot of the changes are being made.
Prime Minister Modi is going to be visiting the UK in November. What can we expect as far as the agenda on bilateral trade and investment is concerned? What would be the priorities on the UK side? What would you like to communicate in terms of concerns, if any, to the Indian Prime Minister? And also, is there a sense within the UK government that the Indian government is perhaps reaching out more to the US than it is to the UK today?
No, well, first of all, I'll take the last part of your question. The Indian government will be reaching out to all countries, whether it's the US, it's UK, all major powers in the world. That's absolutely right. It's in India's interest, and that's what that's what you would expect India to do. It's one of the most important countries in the world, in whether it's economics, whether it's in global security, and I want an India that is having strong relationships throughout the world. Of course, that includes the UK. So the first thing that we can expect is a very warm welcome for Prime Minister Modi. He's very well liked across the UK, especially with the Indian diaspora, and I think actually he's having a big event in Wembley Stadium, and there'll be thousands, tens of thousands of people. I think that speaks for itself, just how warm a welcome he will get. And we will then want to build on the relationship. the trade and investment will be at the heart of that. We're trying to work together on some new initiatives that can try and help boost that, but also see what more can we do to sort of help each other, whether it's on the skills agenda, it's on manufacturing, which I know is important to us, but also to Prime Minister Modi. It's about students going in between our two countries, and also about cultural exchange, which I think is hugely important as well. We have a shared culture, we have a shared language, we have a shared history, and I think when it comes to that space, there's also a lot more we can do.
That's the UK-India Business Convention 2015. Now, it's a first for Infosys. In a conference call with analysts, the company has admitted that it hasn't been aggressive on pricing and is now making corrections in that model. That means that it could sacrifice margins for growth in the near future. Purnima Murli has the details.
Well, that's right. For the first time, Infosys has admitted that the company in the past was reluctant to get aggressive on the pricing front. Speaking at an analyst meet, Praveen Rao, the Chief Operating Officer of the company, said that it has made corrections in its pricing strategy in the recent past, and that has started yielding results in some areas and bringing in more deal wins. But it's just not on pricing. Infy watchers have quite been disappointed in the firm's stance on focusing on digital and have criticized the IT major for not focusing on its traditional businesses. Praveen Rao immediately defended that the company's interest is in pursuing traditional deals. He also said that they were chasing larger deals that would lead to higher business growth and visibility. However, the downside to that is that margins will definitely be under pressure, specifically when it comes to large deals, at least for the first 12 to 18 months, but margins would bottom out towards the later part of the deal. In addition, Rao admitted that verticals like energy, telecom and insurance were lagging behind other verticals. While he didn't give a timeline for the recovery in telecom and insurance, Praveen Rao did say that energy vertical would stabilize by calendar year 2017. Remember, the company has set an aspirational target for 2020. Praveen Rao says that 30% margins is definitely doable, but the biggest challenge that he sees is in the revenue productivity. So we'll have to wait and watch how the 2020 aspirational target pans out over the next 5 years. Back to you.
All right, so that's Infosys changing track. Purnima, thank you so much for that. With that, we come to the end of this edition of India Business Hour. Thank you for watching. Have a great evening and a great weekend.